What's going on, guys and girls? It's the Short Bear, and today we're going to go over 2 trades that I made this week. I'm going to walk you through the process I had, and yeah, we're going to talk about basically how I formed my plan, how I executed it, and everything that I needed to know to take the trades. So the first trade we're going to talk about is VIVE. That's a ticker that ran on Wednesday, and I thought we'd talk about it because this one was just an easy setup that we see over and over and over again. That's going to be pretty much the pattern where I make money consistently, right? So I'm not looking for huge gains on those kind of tickers, just based on basically the range and how much I'm expecting based on the stats. But it adds up, right? So basically it's gonna be right around a trade that will bring in 2 to 3 Rs in general. All right, so I'm looking to make 2 to 3 times the amount of money that I'm risking, and that's why it really helps with slow periods, and in general it helps with waiting for the bigger trades, with the profit that comes from those kind of tickers. So VIVE, the first thing I saw in the morning was kind of the price and where we gapped up from. So 136 was the previous close, all right, and we started ramping up pre-market at 7 a.m. And kind of started fading off, right? So I was watching it right here at $2, trying to find the news, and pretty much no one could find the news. So there wasn't, all right? There wasn't anything that could justify really this kind of move, all right? And as soon as I saw that, I was like, all right, I'm not sure what is going on. So I kept on searching and searching, couldn't find anything, and I was like, all right, let me play the stats at the open. I don't really want to short into something where maybe news will be released in a few minutes, something like that, or maybe I'm just not finding the news, and news is out there. So I wanted to make it an easy play. All right, I know the stats from the open, and I tagged based on that. So my plan was, and that was since pretty much right here as we started moving down, I was like, all right, what I think might happen is people don't know the news, starts fading off, and they start making it look weak into the open, and they basically squeeze a bit, like they squeeze the shorts out a bit, and don't let it, fade right away. So shorts seeing that are going to be super eager to enter the stock at the open. So you really got to be patient. You can't really chase the weakness on those kind of tickers. If I'd rather miss the trade basically, than chase into the weakness and get squeezed over $2, right? Because the risk reward just isn't there. So my plan was to wait for the 195 area to 205 area. That's what I wrote in chat, which is basically right here, right? So that's gonna be the area of interest I wanted to get in at. On this one, we kind of got overextended towards that 190 area, so I took a starter thinking, all right, if we reject here, at least I've got a piece. It's near my target area for the entries, and the rest I'll enter if we start popping over $2. The main target, the main size I wanted to get on this one needed to be over 2 for me, because that, like the $2 pop, so basically ramping over $2 is really going to show the strength basically. So if we start ramping over 2, we break 210 to 20, right, and we start holding, don't even test 2, that would show me a lot of strength from this ticker, because I'm not expecting it and the stats tell me something else, right? But if we just start popping over 2 and we're heavy, and basically people are just covering their shorts at $2 because that's their stop, we pop over and then the sellers come in and slam it back down, right? So I'm looking for that overextension where everyone's getting on the same side, so longs chasing and the shorts covering, which pushes the stock up, everyone's out, and then nobody's really left to hit the offers, right? And then it starts rolling over. So that's what I'm looking for. What I was also looking for in VIVE was the gap stats. So as I told you, I'm a really data-driven trader, right? As many of you should know by now. So what I was looking at was the gap stats, right? So I'm going to tell it again. At Matters Money, we've got a coder partner, right? And he codes everything, right? He's in chat 24/7. He's there to answer your questions, right? And this one, for example, is the gap stats indicator, right? I'm going to put a link in the description, all right? You'll be able to get up to 10% off of the script with the code as well, which is going to be in the description. And in this case, the gap stats is going to basically tell me the history of the stock regarding the gaps, right? So in this case, I took the period of 5 years, and we can see right here, we had 9 gaps over 20% during the last 5 years, and out of those 9, 6 closed red, right? So we've got pretty much a history of closing weak, all right, that we start gapping up and then we slam back down, right? And especially in the last year, as you can see with the blue triangles, we've got 1, 2, 3, 4, 5, and 6, all right, and out of those 6, 5 closed red, and the only other day was pretty weak, right, which was the last run basically, right? So before that, we basically had 8 runs, and out of those 8, I believe 6 closed red, all right, which gave us basically 70% plus history of failing. After that, I'm looking at the average spike, right? The average spike at the open is only 8%, so we don't really stick around much, right? We just pop at the open and then we slam back down, and I was looking basically at the average close from the open when we close under the open, and that was minus 31%, right? So that was kind of my target area. The normal gap, so the gap and crap, the all-day faders, data is going to tell me something a little bit less than that, so less than 30% for sure. So I'm kind of comparing my stats regarding the gap and craps / the all-day faders and the data I have on this stock. So I'm very interested at that point because I'm not seeing any news to justify the price. We're seeing weakness during the pre-market. I like the history of the stock, all right, and I know we've got a lot of back holders, a lot of people who longed during those gap ups and basically lost and are maybe still holding, right? And they're waiting for that gap up to basically unload again, so they don't have to cover on the $1, but on a gap up towards 2, they're kind of recouping a lot of losses that way, a lot, right? So right away, that's what I did, and as I said, not chasing weakness, so waited for the pop from the open. As I said, 8% from 180 is gonna be pretty much at mid 190s, right? And we're so close to that $2 area. I knew if we make it in the 190s, there are going to be a lot of shorts covering, and kind of it's going to get very close to 2, if not break over it. So I knew I wanted that area, right? But as I said, the gap stats, and again in general, like the gap and crap / all-day fader stats told me you're going to make far more money. Your odds are 10 times better if you hold for the bigger fade, right? So from the open 30%, that's pretty much a gap fill right at that point towards the open. So was waiting, and every pop for me was kind of the adding spot because I was still looking for I'm gonna say the normal expectancy of the move. So as we started ramping up, I added, but we started moving towards my stop, right? I decided to add more size because I knew the stats were in my favor, but that also means I can't have the same stop as before, right? As bigger I get, as more risk I'm gonna basically put on the trade if I'm risking this off of the same level, but I can do it another way where I move the stop down, I'm in bigger, and I know I'm likely to get the bigger move. But if we start ramping up, I'm gonna have to trim or cover completely, right? So in this case, we started ramping up, all right? I covered some, I just trimmed some at pretty much my break-even point. I think the last one was a small loss here for that fill, but I needed to get a little bit smaller. I was in too big. We were moving towards or no, I wasn't in too big, but I was in a sizable amount after the ads, and I needed to respect my plan where if we started ramping up, I need to take some off. But we started seeing some volume extension into the $2 area, and we still couldn't make it over 2 like at the open. So I added it back thinking, all right, my stop was pretty much 205-ish, and now I was like, all right, I'm gonna add back the size, but if we make it over 2 now, over this level, I'm out completely. So started adding, started working, and as we started moving towards those areas, we didn't really move the way I wanted. So what I wanted is a big kind of crack here, sideways, and again a big crack. But what we did is we saw big bids the whole time, and we started moving into them and then kind of stopping and stopping and stopping. We weren't really panicking down. So as we headed towards the normal kind of window where I like to cover, where I know we're likely to bounce, and we saw a lot of bidders, and bidders come back and refreshing. I was like, all right, I'm out. That's it. That's what I expect the stock to stop at. And as you can see, the covers worked. Almost got filled everything. Kind of left it alone for the last part and covered as we started curling back up, basically kind of A, B, C, D. The second ticker I want to talk about is SPCE. This one is another pattern. It's more a parabolic short in this case, and I really like this one from a technical perspective of the trade. So if we look at pretty much the daily chart on SPCE, you're going to see this ticker is just ramping like crazy, right? So since December, since $7, we started moving up, started getting a little bit parabolic into January, sorry, and started curling back up, and then we started getting parabolic on bigger volume, right? Volume is always the biggest clue for me. That's what I'm looking at for those kind of trades, right? I want big volume, big overextension, and I'm gonna be looking at the half and whole numbers in this case. So I was watching it, and what I saw was, let's look at the 5-minute chart for 10 days maybe. That's going to give us a better insight to explain exactly what I saw. So in this case, we're getting, kind of, if you were watching, let's say Tesla, for example, we had that kind of a sideways kind of action at 500, right? Where we topped out, moved back, and then started gapping up, and then we started moving, right? So right away, I think a lot of people are going to be looking at it and thinking of Tesla, right? Tesla is going super parabolic. Let me actually no. I think a lot of you guys know exactly what Tesla looks like. Um, you know what? Let's do it. It's going to be easier for you guys to understand what's going on. So this is kind of the chart from Tesla, right, where we're going super parabolic. So my thought process was people that are trading, right, on SPCE are looking at Tesla as basically the guide, right? Everyone has Tesla in their head. They want to really hit something, right? They want to hit something. They want it to go super parabolic towards 100. So a lot of people are kind of chasing. There's just an enormous amount of emotions on this ticker, right? And my thought process is, I think a lot of players are thinking either this is going to go super parabolic towards 100, or the other half is going to be pretty much shorts looking for that reversal day, like on Tesla, the big $900 gap down to 800 and move to 700, right? People want that big trade, so they're looking at the ticker and they're like, all right, when is that going to happen, right? They're gonna see a gap up, like on Tesla, for example, right? And they're gonna be kind of looking for that day where it starts moving and then it kind of fails and then it breaks down, right? And they're kind of starting to short every single pop. And I think that day was pretty much the day it reversed, but in the morning, right? So in the morning, a lot of emotions are still involved. A lot of players are super bent, and I'm looking for the volume for clues. So start opening, and we start failing right away. That's what we saw on Tesla, not on the day of the reversal, but the day before, where we started moving down, and then pretty much back up right away. So basically, shorts are hammering, And when shorts are hammering, I don't like getting in. But what I saw right away was the volume was so nice. Like the day before, we had some nice volume, right? We had an average of like what? Like the biggest candles were 300,000, right? Something like that. Um, but the next day, right away, we saw, you know, at the open, just major volume, right? 1 million. But after that volume, right, we traded 700,000, 600, 500, 600, right? 1,000 volume per minute, right? Which is just crazy. Uh, and when I saw that, the volume kind of getting parabolic here, right? We see the big volume increase, and then we start really ramping up, right? And we start really kind of skipping dollars. That's the action I want to get into, right? Because the previous days, we had kind of action where we started moving up, but few red candles, few red candles, few red candles. So some people are still selling or people are shorting, right? But we're not seeing that super extended move. And the next day, that's kind of what we saw where we didn't have those red candles, right? We just had um, just buying and shorts getting out, just blowing up, right? And as soon as I saw this action where it got to 38, I started in, all right? So it's here. I started in because I saw the volume was getting bigger, all right? Volume getting bigger and bigger. We're getting super overextended. And I think a lot of people are looking for that $40 break, right? So either shorts are really scared for the $40 break to happen, or longs are still in and still longing to get that 40 break. So exactly because of that, and because people are looking at other stocks that go super parabolic, I'm looking for a short at those areas in very big overextension. So started overextending, and then we had that first red candle, and then we started shooting up again, but it slammed back down right away on some super nice volume. Again, 700,000 on that candle, and that gave me kind of the all right, let's get in, right, kind of signal, because now we're really overextended, right, from like 30 to $40 in one day, so 25% on something that big on such huge volume coming from six. And I knew, all right, this is an area where I'm likely to get a fade, or not a fade, but at least a rejection. And I want to get in. I think my odds are pretty good. So got in, bigger, as you can see. And as we started slamming back down here, popping, I was looking at the volume again for inside. So I don't want to see big volume, right? I don't want to see it just slam back down on small volume and then pop on bigger volume and continue. That's not what I want to see. So I want to see a slam on big volume and then a pop on low volume, slam back down, pop on low volume, slam back down, right? So that's what we saw, slam, pop, slam, pop, slam. And as you can see, the last pop on this one, look at the volume, very low volume on the pop. So that's exactly what I want to see. And then the big rejection, the big seller comes in, very nice volume on that on that red candle, 700,000. And then I'm looking for kind of pops to get in, right? So at first my stop was the high of day, right? So right here. But as I started adding into the pops, my stop became tighter and tighter, just over this level right here, or I think this candle, to be honest, right here, right? So as you saw, as you can see right here, we started moving, and we started to get exactly at my stop, and it stopped me out, right? But we slammed back down right away. Those guys are really pro, right? This is not the kind of parabolic we see on small caps. These guys know exactly how to get you out exactly at your stop, and they're gonna look for those areas to basically find liquidity. And as we slam back down, I entered as much as I could right here and added to full size right away, thinking, all right, if we start heading back up towards my previous stop, now that it got taken out, right, all those stops are kind of getting tested and everyone getting out, it slams back down, right? So as we saw that, started curling back down. As you can see, volume on the pop is very low, right? And we start accelerating. And I'm looking at the open, right? The open is my first target right here. And the next target is going to be green, red, which is at 28, 29. And I also want basically for the stock to slam under 30, right? So the biggest stops are pretty much going to be at the low of day right here and $30. So that's pretty much $30, right? So that's going to trigger a lot of stops basically and bring it basically to the last stops. And as you can see, we stopped exactly at green red, pretty much where every stop was. So I think what happened is we had 28 70s here as, you know, green red, and most stops are going to be at 29 basically, because, you know, it's so close and it's a whole number. It's easier to get it there. People are going to think, all right, if we make it under, we're going to test anyway, so let me put my stops there. And the manipulators know exactly that that's going to happen. So here, that was only a fourth, all right, because I really wanted to see the big picture on this trade, right? We're not, I wasn't looking at, you know, just a small move. I mean, we're moving from $6 again to 40, so I'm looking for the bigger move and possibly a swing. But as we made it, you know, as I covered here, and then we moved down $10 within a day, I knew, all right, now my stats are telling me if the fade is so big, you're likely to get kind of more of a consolidation day, the next day, transition day, and then the next move. So covered everything as we started going super parabolic to the downside, and the volume just increased massively, right? And that's really a good idea to lock some in during those very emotional moves on big volume, exactly like the entry, the exit is made on the big volume, right? All right. So this is it for this week. I hope you liked the video. If you want to learn more about my trading and what we do at Matters Money, the link is going to be in the description to check us out. And yeah, if you liked the video, please share it around, and I'll see you in the next one.